Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, I'm going to give you 2 value stocks that I think you should add to your watch list, do further research, and then decide if it is a good fit for you. Now, as always, when I do these lists, I always like to kind of tell you how I came up with it, why it's on the list, and how it may fit into your portfolio, and how I think the stocks will do well. I'll tell you which ones I own. Now, I will also tell you that I did a list of 5 value stocks that I like right now that is already inside of our members only. If you want access to that, as well as the other, I think 40 or 50 exclusive videos that we do add every single week, then you want to join the members only. Okay, you want the full list of 5, that's where you get it. And again, I add new videos every single week. Okay, so again, this will be very quick. It'll be 2 companies. The way that I looked at this is I'm, again, looking for value. When I look for value, there are a few things that I like to check off the list. Number 1 is momentum. I don't invest in companies that aren't going in the right direction. That's not to say that a company that is down today or has been down the last year cannot turn around, okay? But if I have to choose between a company that's going in the right direction and one that's not, usually I'm gonna go with the train that's moving in the route that I'm going. Okay, look, you going that way anyway, let me just hop on the train and just go that way. The other thing too is we use PE ratio. I've talked a lot about that before. The average PE ratio for the entire S&P 500 last year was 25. Generally speaking, the lower PE is telling you that a stock is undervalued. That tells us that, hey, look, this might be a time for us to get in because in the future, we're long-term investors here. So a year, 2 years, we think this stock will certainly rise. I'm also looking for companies that have a very low debt ratio, meaning from the income and the money they have on the balance sheet compared to their debt, they're in a very good position. So each of these companies, or both these companies in this case, but all 5 on the members only list, they all fit these categories, right? So the first one is Principal Financial Group, that is PFG. They are up at the time that we were putting together this list over the weekend. They're up 16% in the last 6 months, up 25% in the last year. Obviously, compared to the S&P 500, during that entire time frame, this did what? 4 or 5 times better than what the overall stock market did. This is very similar to a lot of the companies that I've been telling y'all about when it comes to insurance. So Principal Financial, they're not the only thing that they do. Insurance isn't the only thing they do, but it's a big part of it. And when I talk about insurance, I'm really talking about like the investing side of things. So yes, life insurance, more so annuities, very boring but profitable financial products for Principal. I expect these stocks, including this one, obviously, to do quite well, quite solidly for the rest of this year. And I can't say for the foreseeable future, but definitely over the next 6 months and over the next year. Now, there are some companies that I believe has a higher likelihood to outperform Principal. I'm going to tell you now, okay? Perhaps it's a secret, perhaps it's not. Every stock that you invest in, we obviously want it to grow. Okay, that is not news, but not every company, you don't have to hit a home run every time. If you are someone who enjoys sports, you don't have to dunk the ball every time you get a layup is fine. A free throw is fine, as long as you score, as long as you in the game. For me, I think Principal Financial is one of those solid, hey, I know what you're going to do. I don't think you're going to make me super, super, super rich tomorrow, but I can rely on you. I think you are going to give me a solid, I don't know, 20 and 10, as opposed to dropping 70 points a night for those who watch the NBA. Y'all got the inside joke if you watch, even though I'm wearing a baseball hat. Aside from all that, Principal Financial, it is a stock I currently own. I've had it for a little bit now, a little bit meaning like, I'm say a month and a half. I do plan on holding on to it as well. Other companies that fit in this category, but again, not as much as of a value today. Something like Progressive. Been talking about Progressive for forever. Globe Life, GL, is another one that kind of fits in this category. But of all of those, I think Principal Financial is the best value in terms of what you're paying for the stock now compared to how much money it's making, how fast it's moving, and everything in between. So that is the best value, I think, in that category. Principal Financial, PFG. The next one here is a company that I don't really talk about a lot. Over the last year, I would say most of my life, I have not been the biggest investor in oil stocks for a few reasons. Now, what I feel like and my feelings about something don't mean nothing to you, okay? I feel the way I feel about stuff. You feel the way you feel about stuff. Okay, it is what it is, and that's totally fine. I would say from the time I really started getting into the stock market and stuff, so like 2010 or so, about 2010 to maybe like 2018, 2019, oil stocks were terrible. So that's number one why I never invested in oil. And then once we got to the Russia-Ukraine conflict, I was like, I don't really know. And then lastly, I'm from Oklahoma, so there's a lot of oil there, but I'm not the biggest oil expert. It's a commodity. Now, these companies are not commodities, but it's just a difficult market to really gauge. You look out the window, gas prices are high. You look out the window again, they're low. Hard to call, right? So that I'm putting asterisks out there that I'm not the biggest oil expert, but what I will say, if I'm objectively looking at the numbers and looking at my stock screeners and doing my research, ExxonMobil still somehow fits as a value, as low debt and this high profitability is what they've been over the last year and change. They're up 19% in the last 6 months and up 39% over the last year. They announced a major buyback. Now I have to go and search to see what the exact number is. And I'll just put it here. You can see that number. I cannot. But if I remember correctly, because I don't even have it on my notes here, I thought it was like a $70 billion stock buyback. I remember my partner and I, Andre, we do a podcast together. We were discussing whether or not we were going to have it in one of our shows, the Investing Flavor podcast. Every Sunday we record and it comes out on Monday. So if you haven't gotten that, check it out. It's on Spotify and everywhere you listen to podcasts. Aside from all of that, though, I thought we had talked about it. We were discussing at least putting it in the show. And I was like, that's a huge buyback, $70 billion. And again, y'all will see on the screen whether I'm right or not. But they were doing a major buyback. I don't love stock buybacks just because I don't think they're as productive. I think take that money and invest it back into the company, not literally invest it, but not the shares, but invest it in terms of renewable energy, better, more efficient oil, or whatever to create the next great thing as opposed to just buying back the shares. Aside from that, though, data does show that when companies do stock buybacks, you tend to win if you are an investor. One of the biggest companies that has been doing this for decades has been Apple, and with the exception of 2022, Apple had been one of the biggest, best performers in the stock market for years. So I'm just throwing it out there. Okay, just throwing it out there. But the two companies I like right now for value, even though I'm not investing in Exxon, I don't plan on investing in Exxon just because of how I feel about oil, but Principal Financial and ExxonMobil, XOM, PFG, for Principal. So those are my two for value. If you want the entire list of 5, you want to make sure that you check out the members only. Do it right now. Okay, go ahead and do that right now because it's coming Friday. I'm gonna get another exclusive video inside the members only. It's only $10 a month. Exclusive videos every single week. You got a question, deep dive breakdowns. So we talked about, we had a tax question someone asked about understanding tax loss harvesting. We broke that entire thing down. What tools and things are used? How do I research? How do I look through financial statements? All of that stuff is inside the members only. Go ahead, join. You know where the link is. Okay. All right. Last thing, I will be out this week. I'll be in Mexico vacationing, and I will make sure that we'll have all our content and stuff together. Also, check out our YouTube shorts too. There are short clips of these, and then make sure you do definitely like and subscribe, and leave a comment if you got something to say. I would definitely love to interact with you. But also, they're changing algorithms. I can't stand this. I can't stand it, but they're changing the algorithms here on YouTube and in other places. So it's making it, stuff is changing. Okay, apps are changing. People are moving towards different forms of content. So the best way to help me to continue to provide content to you guys and be as effective as I can in helping y'all, you tell me what you want by commenting and liking the video. Helps me to decide that. It helps to show me what content I need to make more of and where we need to shift so I can be in front of you to help you the best I possibly can. All right, that is it for me. I will talk to y'all tomorrow.